Assalamu alaikum friends. Welcome to SBR Revision Kit Solutions. Question number 1. Okay. Uh, this is the latest SBR Revision Kit. Okay. That we have just got. And I'm sure that you also must be having the same textbook. If you don't have it, you can email me at sabiakhtar@gmail.com and I will be giving you the books over there. Both the textbook and the revision kit. Okay. So before I start this question, there are some changes that has been made to the SBR revision kit questions. Okay, the order. Number one is the order have changed. Okay, for example, in the previous textbook, question one was something else. Now they have updated it, and now question one is your September December 2020 paper, which is sugar. Your question number one. Okay, so I think two more questions came up as question number 1 and 2. That is the changes. Other than that, all the other questions under your group financial statements, which comes in your section A question number 1 for 30 marks, I have covered in the previous sitting. That is for September. So the same you can use it for the December sitting also, because there are no changes in it. Same questions are still there in the revision kit, except some few addition questions are now there in the latest textbook that I'm going to cover. And also for the September session, the questions that I've not covered, I'm going to cover now for the December session. That means for the December exam, when you enter, you will be having all the questions from your SBR revision kit, the Kaplan revision kit, in my playlist. So from question 1 to 68, there are 68 questions now. But I think the last set I will not be covering. That is for the UK syllabus, UK gap focus and all that. I'm not going to cover. Apart from that, I think there are around 57 or 58 questions. The number actually does not matter. What matters is all questions will be covered. Okay, so for group financial statements, all the questions has been covered. Two additional questions are there. Question number 1 is sugar. Question number 2 is hummings, which I'm going to cover. And after that, we can move on to the other questions. That is your ethics questions and your all those other questions. Okay, so these are the only two questions left for your group financial statements. Okay, so sugar question is your question number 1 in your September December 2020 paper. This question is about, one is your cash flow statement and the other one is your pension, IS 19. Briefly about IS 19 it talks about. Now you need to know that for group financial statement, even though the word is group financial statement, it does not mean that you will not be tested other individual standard. You will be tested at the individual standard. For example, income tax, deferred tax, employee benefit, financial instruments, which is IFRS 9. Other standard also will come here. But the main ones are your subsidiary, you have to consolidate. If it's an associate, you don't consolidate. If it's a joint venture, what do you have to do? If it's a joint associate, what do you have to do? If it's a financial instrument, how are you supposed to account it in the financial statements? Okay, these are some main things. But other than this, you might be having other small standards like non-current assets held for sale, how you deal with it. Okay, so this is just an overview that I'm giving you, the type of questions that you can expect in group financial statement. Okay, so before we go through the background, okay, let us go through the requirements. Okay, because I always say that start with the requirements. The requirements will give you what is there in the whole case study, even if you have not read the whole case study. When you're practicing group financial statements, please practice group financial statements one after the other. It should not be that one you are practicing group financial statement, next day I'm practicing ethic question, third day I'm practicing question for my section B questions. No, when you are doing sitting to do group financial statement questions, let's say there are 20 questions under group financial statements, all the 20 questions one after the other, 2 questions per day, 3 questions per day, I don't care how many questions you're doing per day, but when you're doing it, do them together, because they're similar type of questions. It needs to be done consecutively one after the other, and after you have finished all the questions under group financial statement, then you are going to touch the next set of questions, that is your ethics or your section B questions. That's how the process should be. Okay, it's not that one I do group questions, second I do ethics because I got bored with group financial statement. No, there is no, this word should not come up with that I got bored with the group financial statement questions. No, that's the whole purpose. You have to become bored. That means you have to do it multiple times to become bored. Once you become bored means you've understood everything. It's just a repetitive step that you need to do. Okay, to reach that stage to say that I'm bored with group financial statements, that means you have done this question multiple times. Not the same question, of course, but different type of question, because questions are similar. Let me tell you this, group financial statement is the easiest question where you can score the maximum marks. Okay, why it is easiest? Because question comes in a similar order, same way. Maybe you have to calculate goodwill. If you're calculating goodwill, it's similar for any type of questions. It's just like filling in the blank. Okay, maybe two, three figures will be given, one you have to find out. So it's like that. So group financial statement also don't, you have to deal it like that. You know one question, just replicate the same set of understanding and application in the other questions with some differences. You have to modify a little bit because some scenario to scenario there are some differences. Okay, not exactly the same. Okay, I would be wrong if I say question the two questions will be exactly the same, just the numbers are changed. No, with the numbers there are some additional things which are or some delete some things are deleted from our two questions. So that's why two questions are not same, but they are not entirely different also that you cannot solve. You understanding what I mean? So when you're solving a particular type of questions, make sure they are in a under the same topic. For example, group financial statements. Already revision kit, Kaplan revision kit textbook. Sorry, the revision kit book. Okay, they have already summarized it for you. They have already done the grouping for you. They have already grouped all the questions together. For example, if you see question number 1 to, I don't know whether 18, 19, it's group accounting only. Group financial statement. Questions on group accounting. So it's easier. You don't have to wonder which questions I have to do. You have to start with 1, then 2, then 3, then 4, like this. Maybe you can take 10 separate days to do 10 questions, or you can do one question, maybe 3, 4 questions in one day. Speed is up to you how you want to do it, because not everyone is same. Some of you are working, will get less time. Some of you are full-time students, you will get more time. Some of you are doing one paper, you will get more time. Some of you are doing 2 3 papers together in one setting, which is not again advisable if you are doing P levels, but still people are doing, then you will not be able to do it in you will not be having more time. So depending on your time that you have to set the questions that you have to do. Okay, if you don't have the time to do the whole revision kit, let's say there are 50 questions. If you don't have the time to do all the 50 questions, don't worry, just pick up a topic. For example, group financial statements, you anyway have to do it. So just do 2 questions or 3 questions under this, just to have an understanding of how it looks like. This shall set a base for you. This will give you an idea. Under group financial statements also, when you are doing questions, please be careful. The question that you are picking needs to be different from one another. Why? So that you know the taste of different type of questions. For example, one question will be, you will be having a local subsidiary. There is no exchange rate or anything, foreign exchange rate, nothing to deal with it. Second question, you have to take where there is a overseas subsidiary. There you have to exchange using foreign currency. What is the presentation currency? What is the functional currency? How to determine this type of question? Third, you will be selecting third question under group financial statements. You will be selecting where you have to make a statement of cash flow. So you see different types of questions are there, different nature, different things might be will be asked under the group financial statements. So under group financial statements also there are different ways. You might be asked cash flow statement, you might be asked the foreign transactions and all. Sometimes you might not be asked foreign transactions. Sometimes you might be having a joint venture in a question. Sometimes you might be having just an associate or a subsidiary. So every question, this question differs. For example, if you are having question number 1 2 3, all are the same. They are dealing with one subsidiary, one associate. Then you can eliminate. You don't have to do all the 3 questions. Just do one question or 2 questions, depending on your time and your schedule, to have an understanding. But you have to attempt a few questions under each area. For example, under group financial statements, you have to do 5 6 questions, or let's say 5 questions. Under ethics, you have to do few questions. Under section B, current issues, conceptual framework, you have to do few questions. So like this, you have to touch every area. Even though you're not able to do all the questions, this is for those students who are working and who does not have time. Okay, for them I'm giving this suggestion, not for the ones who are a full-time student who is already doing SBR, who has full 3 months or 2 months or 6 weeks. For them I'm not suggesting. For them I'm suggesting you have to do the full tech revision kit. Better if you can do it 2 times. Of course, in the second time you will not be doing all the questions, but a few questions, randomly picked questions you'll be doing. But anyways, so these are some few suggestions. Okay, so now let's start with this question number 1, which is sugar. It is from your latest paper. It's a big question. A lot of things needs to be done, but don't stress. You need to break down this into small pieces of information. Let us go to the requirement. So the requirement says, okay, you see you have been given the financial statements, profit and loss, pension scheme, that is regarding IS 19. Okay, so there are three requirements. Okay, first requirement, if you see, okay, I'm not going to read one by word. You can the reading you can do yourself, but I'm just going to break down this into four separate requirements. Okay, so A has four separate requirement. Okay, basically you have to draft an explanatory note under which you have to explain how this following things will be accounted under the consolidated financial statement, and it also should include the statement of cash flows. Okay, for example, initially what happened, I'm just giving a background. Okay, whatever here is there in this background here, I'm not going to read one word by word. I'm just going to, because I've read it already, so I'm just going to summarize and tell you the key points from there that you need for the understanding of this question. Okay, so initially what happened, there's a company Sugar, it's the parent company. It has acquired 40% investment in flour company. Okay, 40% investment, it's an associate. Okay, with 40 initially. So this is basically a step accusation that they have gone for. Later they have bought additional 30% in the flour company. That means now they became a subsidiary with 70%. Okay, so that's the whole scenario. And meanwhile they have another subsidiary also. This Sugar, who is the parent company, also has another associate, that is Butter. Okay, but with Butter and all transactions is not so much. Okay, but it's little. Okay, so basically now you have to explain, or you have to show with calculations how the initial 40% investment and the additional 30% investment in flour will be accounted for in the consolidated financial statements. Okay, also the cash flow will come here. Consolidated financial statements means usually what the examiner wants to say is profit and loss and the balance sheet, but here cash flow also you have to include. Okay, then these are the first two requirements. The third requirement is, already they have calculated goodwill. You don't have goodwill, means when it becomes a subsidiary. Okay, goodwill has been calculated, you don't have to calculate goodwill. Figure has been given, using that goodwill you have to calculate cash paid to acquire how much cash consideration you have given to acquire that flour, that additional 30% in flour, to get the control, that you have to calculate. And finally the fourth requirement, you see, even though it's requirement A, looks like one requirement, but there are many sub requirements under that. Fourth requirement is, okay, I will take you through requirement, sorry. Okay, fourth is, briefly you have to explain, not calculation but explain, okay, on how cash to be accounted in consolidated statement of cash flows, how this cash, okay, that you have taken to acquire the control of flour will be accounted in the consolidated statement of cash flows. Okay, because you have calculated that cash to acquire the control, right? Now what are you going to do with that cash in the consolidated statement of cash flow? You have to explain also for 10 marks. Requirement number B, you have to prepare extract. Please make sure it's an extract, not the whole statement of cash flows. Two things, one is investing activity, the other one is financing activity. Usually it's 16 marks. More marks will go for investing activities because there are a lot of items under investing than the financing. Okay, financing I think is just only two or one or two. And clearly they have mentioned no explanations are required in part B, so don't try to explain, just calculate. Part C, part C is regarding your last, that is your IS 19. Okay, what is the impact of the defined benefit pension scheme on the statement of cash flow, if whether there will be an impact or not, that you have to describe. Describe means explained. Okay, and also you're assuming cash flow has been from operating activities are calculated by the indirect method. Okay, so assuming cash flows from operating activities are calculated by indirect method does not mean you have to go and start calculating it using indirect method. No, you just have to describe, because just see the marks. So don't waste your time doing operating activities under indirect method. It has not been asked from you. It's only for 4 marks. So this is the whole scenario now. Okay, now if you want me to break down this for you, I have let me get my pen. Okay, so here the whole scenario is this basically. Okay, so the answer is here. So there is a company called Sugar has purchased flour F. Okay, on 30th June it was 40%. Okay, 30th June 2007 X7 it was associate. Okay, later, okay, how do I Okay, anyway, okay, I will show this. It's like this. So later, I don't know whether this diagram does not matter, but what I'm trying to show is through a diagram. Okay, on sorry, 1st of July 2007, they bought additional 30% in flour only. Who bought? S. Okay, I'm showing two times F. Don't get confused. It's just one only flour, but different date. So 30%. So 40 plus 30, 70%. Now he's a subsidiary. So now, since he's a subsidiary, you have to consolidate line by line when he's a subsidiary. Meanwhile, he also has an associate. He is just an associate only. No changes here. Butter. That is butter. Okay, B. So this is the whole scenario. Basically, you have to show the impact on the statement of financial position, statement of cash flow, statement of profit and loss, with discussions and some calculations. And lastly, pension benefit, how it will have an impact on the cash flow. This is the whole question all about. But to do these questions, so many workings are required. We'll see that. Now you have read it. Now you can read background. No need to read. I have already told you what they have done. Okay. This 1st of October 2007, they have acquired an associate, which is butter. It's not even a whole year that he has been an associate. Okay. So now let us go directly to the accusation of flour company. What I'm going to read, not line by line and waste your time, just the key points, pull out from there the main number, that's it for our calculation purpose. Because section A, always when you're doing, keep this in mind, you have to pull out, don't get lost by all these long paragraphs and what they are writing about the company, the descriptions, it's not needed. Your main focus is on calculation part, so take out the right number that you need for your calculation, that's it, especially in your section A, that is your group accounting question. So that's what I'm going to do. For this, you need to know your NCI, your number of shares, how much you have purchased, the fair value, the net asset, what are the net asset, whether there have been any increase in fair value of the net asset. All these things are important for you. Also, before the 40%, when it bought the additional 30% of that butter company, all these things you need to know. Okay. So FLA is a associate. It has 10 million shares. 40% was they have purchased it several years ago at cost of $10 million. That means the cost of associate was $10 million. Okay, and share is 10 million. This investment gives significant interest. All those are not needed. How much they have bought this associate for? 10 million. Now, what about that additional 30% shareholding? How much they have bought this for? They bought additional 3 million shares. Okay, but this, be careful, they have bought it in two parts, not just by cash. One they have given in cash, the other one is one for a two share exchange when the market price of sugar was $6 each. Okay, so in their individual financial statement, net asset increased by 12 million between the two accusation date. That means first when they have bought the 40%, and then second time when they have bought the 30%. Now we are only dealing with one company, that is flour. Okay, that time net increased between these two accusation date by 12 million. Carrying amount of net asset is this. They have given you the breakdown: intangible, tangible, cash, and other non-current asset. Okay, you need this. So carrying amount of net asset, okay, is equal to the fair value. That means this is equal to the fair value, but land had a fair value of 600 above the carrying amount. You have to inflate this fair value by 600,000. Okay, and sugar values NCI at fair value. Here they didn't give you the fair value of NCI, you have to calculate. How? They have given you the share price, which is 3.8. So number of shares into 3.8 into the percentage of NCI. That is after taking that 70%, 30%. So 70, that means 30% is NCI. Okay. So this share price is also used to calculate NCI at initial 40% equity interest. Okay. Now goodwill has been correctly calculated. Okay, don't try to go and check whether this goodwill is correct or not. You cannot do it. Why? Because you don't know how much cash you have given to buy that flour, the additional 30%. You don't know that. So that's a balancing figure. Using this goodwill, you will calculate now. Understood? Now, asset accusation, and apart from this accusation of a company, that means he was associate, now he became a subsidiary. He has also done some asset acquisitions and disposals also during the year. This also you have to take into account. Okay. So first paragraph is not important. They have correctly consolidated. Second, no disposal or impairment of intangible assets. Okay, but amortization of 3.5 has been deducted from profit from operation. That means you have to add it back again in the operating activities, but it's not needed because operating cash flows has not been asked from us. But keep this in mind. Okay, so number one is amortization. Maybe you can write here. Number one, amortization 3.5. Third, each paragraph talks about one particular thing only. For example, first paragraph talks that it has been currently consolidated. Second paragraph talks about amortization. Third paragraph talks about property, plant, and equipment. So for property, plant, and equipment, okay, they have disposed some of them at a loss of 2 million. Our focus is on calculating the cash, how much cash that they have received from selling, okay, because we have to show the impact on the cash flow. And also depreciation relating to property, plant, and equipment, depreciation also will come. So this has been deducted 10 million. So number two is this. Number three, okay, three things. So this is number three is amortization. Number two is loss, okay, and depreciation, amortization. You see, I'm just noting it so it becomes easy for me that I know, okay, these are the words. Amortization is 3.5, depreciation is 10, loss is 2. Third, this is about associate. This is about butter. So 25% equity interest in butter. Okay. For how much? 5 million cash. Only cash. That's it. This is simple. They paid a dividend. This you need in the cash flow. And sugar also received dividend. This also you need from other associate. Sugar did not pay any dividends. Okay. So here it's about dividend. Okay. Now 4. There were no acquisitions and investments measured at fair value through profit and loss. Okay. During the year they were disposal, which had a carrying amount of 4 million. 4 million of this, okay, this they have sold for 4 million. Sold at a profit of 500,000. Okay, fair value gain is also included. And it is put where? In the investment income. That means from investment income, you have to take this out. Okay. It is then the consolidated statement of profit and loss. Later you will see below. This investment income also includes dividend received from this investment. This also you have to deduct. And any fair value gain or losses recognized in the initial investment in flour. 3 things you have to deduct from investment income. One is the dividend that is received, fair value gain or loss in the initial investment, because initially you have bought 40%. When you have taken it, purchased the additional 30%. Okay, so there might be some fair value gain or loss during that period that needs to be deducted from investment income, and that fair value gain, okay, of that this thing, the instrument itself. So in addition to the shares issued to purchase, they have also issued some ordinary $1 share for cash, okay, during this year. So all this is for shares. This is fair value profit and loss. There are so many things under this. Okay, now to financial extract. Okay, so here we have intangible property investment. You see this one, financial asset we have. Investment in associates also we have. Equity we have, share premium we have, and NCI. And we have the consolidated statement of profit and loss, investment income. From here we have to deduct 3 things. Okay, share of profit from associate companies. This is for calculating the associate, and profit for NCI. Okay, now we have pension scheme. So for pension scheme part, I'm going to touch it at the end because I don't need it for my part A and part B. It is for part C, isolated. So let us keep it there only. We'll first finish part A and part B. Okay, so when you do part A, okay, there will be so many workings. Okay, usually what happens in exam stress, students will forget what are the workings or how many workings exactly from beginning. They will not be able to know. That's okay, but some common workings are there which everyone needs to know. For example, when you're calculating goodwill, we need net assets, NCI, those things. Okay, but here specifically requirement A, what they told, what is the impact of initial 40%, then the 30%, then the cash, calculate cash, and then the impact of that, how it will be accounted in the consolidated statement of cash flow. So here, what do you need to calculate? Cash pay to acquire flow. Keep a subheading like this, proper subheading. you are calculating it. Okay, first you need to identify what is the actual thing that is happening. You need to identify and say that this is a step accusation. Accusation of this company is a step accusation number one. Okay, so what does it mean? It means the original 40% is disposed. Original 40% is disposed. Whenever step accusation is there, okay, and you are gaining a control. When it's from control to control, it's not, you don't have to calculate profit or loss. There is no disposal that happened. But here disposal happened. What disposal? You are an associate at 40%. You have acquired 30% and became a 70% subsidiary. So at this date, this is, let's say, 30th June, 1st of July, just one day. Okay, so at this date, from 40 to 30, you are having control. Before you didn't have control, now you're having control. So because control you are gaining, that means a disposal has happened. You are disposing this associate. That means there will be a profit that you have to calculate on this date, 1st of July. Okay, you need to change it to the fair value. So this treated as disposed and it is reacquired at a fair value. What do you mean reacquired? This 30%. You are selling this 40%. That is the actual meaning. Even though you are not selling this 40%, with this 40 you are adding 30 and gaining 70. But for accounting purpose, it is said that you are selling this associate and then you are getting whatever you are getting. It has to be reacquired at a fair value. Okay. This is all from your step accusation. It will be under your chapter 20, 18, 19 and 20. You will understand this better. It's there in your Kaplan textbook. So the difference between the carrying amount, okay, of the original 40% equity interest and its fair value. Okay, what is the difference between this 40% equity interest on that date when you are selling, when you are purchasing? This 40% the carrying amount versus the fair value. The difference will be included as a gain within profit or loss. Why? Because they told us to show the how are we going to account for the initial 40% equity interest. That's what we are actually doing here. Okay, so it will be a gain. Because you are gaining control, it's a gain. A disposal has taken place, it's a gain, and it will be recorded in profit and loss. Okay, tutorial notes and all is not needed. It is just for your understanding purpose. It's given. Okay, in your answer it will not come. Okay, so what happens? Any gain or loss, remember, from step accusation will go to profit and loss. But if that before let's say this was 10% equity interest, it's not at 40%, okay, less than 20%. So this 10% equity, now you have bought 60% and then it became 70%. Then there's a change. Then this can be recorded in OCI or profit and loss. There's an option. Why? Because this is 10% equity investment might be designated to be measured at fair value to other comprehensive income, financial instruments, because this is an associate, there will be no issue. It will be in the profit and loss only. But if it's a financial instrument before you bought additional, then you can record it under other comprehensive income also if it is designated to be measured at fair value as the other comprehensive income, the gain. Okay, that is the purpose of this tutorial note. But here no worry, it's associated, so profit or loss. Now you need to calculate this, because that 40% when you bought, that initially you have to show the calculation. You wrote it, okay. So now it's an associate. That means this you have to account using equity method. You have to write this word. This word has to be there. This equity method. It's an associate. Okay, so at this date, 1st of July 2007, what is the cost? How much you have bought the associate for? 10 million. Okay, you're dropping down the 3 zeros. So that's why you're writing 10,000. But the mean when you read it, it's 10 million. The cost is 10 million. Okay, you got it from here. You see, let me highlight it for you. It's cost of 10 million. You have bought this associate for 10 million. This is the cost. After that, you are adding the share of post accusation. After the accusation, the net asset increase. How much was the net asset increase? They told that in the individual financial statements, okay, the net asset increased by 12 million. So that on that increase, you are applying the associate percentage. That is 40%. because initially you just had 40%. So with that cost, you add the share of the post-acquisition net asset increase, and you get your investment in associate, which is 14,800, 14.8 million. Okay. Now, if there is any impairment related to associate, you deduct it from the carrying amount of investment. But there is no impairment, so nothing to worry about. That's it. That is what is written in the tutorial note. Okay. Now, remember, it was on that date, 1st of July 2007. Okay. So you have to calculate the fair value also of that 40%, of that associate. What is the fair value of the original 40% interest? Okay. How are you going to calculate that fair value? Remember, they told that you can use that share price to calculate NCI. You can also use it to calculate the fair value of the original investment. That is 3.8. Okay. If you are forgetting it, okay, this 3.8, you see. This share price should be used to value NCI at the date, and to value the initial 40% equity interest also you can use the share price 3.8. So it is serving two purposes. One is NCI, one is initial investment valuation. So 3.8 into what is the associate percentage? 40% into 10 million. Why 10 million? Why 10 million? 10 million is the carrying amount here, the cost here. Okay. Don't take this 14,800. This is the carrying amount. You are calculating a fair value, then you are comparing this carrying amount with the fair value. 14.8 with the fair value to see the increase, the gain. That's the whole reason. But when you are taking the fair value on the cost, you have to take 40% on this 10 million into 40% into 3.8, hence 15.2 million. So when you compare this 15.2 with this 14.8, this is the gain, and this should be included in profit and loss because it's an associate. Okay. And goodwill, you are not calculating because when you're having initial 40%, you don't have control, no need to calculate goodwill. When you are buying that additional 30%, then you become a subsidiary, goodwill has to be calculated. But in your case, goodwill has already been calculated and is correct, so no need to calculate goodwill. So goodwill part is over. Okay, but you have to write what happens when you buy the additional 30%. Okay, so at that date, goodwill will be calculated at the, you have to write how are you going to account. So these are the things you are going to write. Okay, that when you are buying the 30%, you are gaining control, and that date goodwill has to be calculated. This is the date, 1st of July 2007, when you are buying 30%. Goodwill will be calculated the day control is gained. You have to write it. When are you can, which date are you going to calculate goodwill and why? Because that is the day when the control is gained. Okay, and how are you going to calculate goodwill? You have to write it because they don't. How are you going to account for it? Remember, you don't have to calculate goodwill, but you have to write it in sentence. So difference between the fair value of consideration and NCI and fair value of identifiable net assets at acquisitions. Simple. And remember, this time the consideration that you used to calculate fair value must also include the fair value of original 40% equity interest, as well as the fair value of additional consideration. So it has to include two consideration. There are two parts to this consideration. One is the fair value of original 40%. The other one is fair value of that additional 30%. Two things. Okay. At least you have to write. Even though goodwill you don't have to calculate, but you have to write it. Because this, from here you are showing when you are buying the 30% additional, how are you going to account for it? Requirement asked you to do that. Okay, I'm not going to take you back to the requirement. I'm sure that you must have clearly read it and you understood it also. Okay, because going there, coming back, waste a lot of time. Now, tutorial notes say students are very confused to measure NCI. Okay, so NCI is simply easy. You just take the cost into the NCI percentage into the share price, because they told share price NCI will be calculated using this this 3.8. So 3.8 into 30%, because that is the percentage of NCI, into 10 million. Why? Because 10 million shares. Okay, just okay. Here also, I'm sorry guys, this 10 million is not the cost. This 10 million is the number of shares. Okay, number of shares, because out of the share, 40% is the associate, and into 3.8 the share price to calculate the original 40% interest. Okay, that is not that 10 million associate thing. I have that's a wrong thing which I told you. Okay, this 10,000 This 10 million and the 10 million of share is wrong. Same, that's why there's a confusion. But that is the number of share. You see, both are 10 million, that's why. Okay, the cost is 10 million and here 10 million shares. So we are multiplying by 10 million shares only, the share price. And then associate or NCI percentage we are taking. Now, so here, how are you going to calculate NCI? 11.4, just simply 10 million shares into the share price into 30% because NCI is 30%. After you have got the control. Okay, it should not be 60% because you might be saying 40%. Why not NCI? How can NCI be 60%? Come on, it should be less, no? And remember, when you are buying, the additional 30% is not just by cash. You are exchanging shares also. Their share exchange also you have to calculate the fair value. Everything has to be calculated in fair value terms. Remember that. Share exchange, NCI, associate, everything. So fair value of share exchange. How are you going to calculate it? In the beginning they told 1:2 share. 1:2 share means for one share of flour, it will be half of the this thing. To acquire one share in flour, you have to give half share of uh, the sugar. Okay, we'll read it again. No worries. Because this is a bit confusing and you have to get it straight right away. 1:2 share exchange. 1:2. So for 1, just divide this by 2. Here also I'm going to divide it by 2. That means it's half. That's my half share you are giving of your sugar to flour to get one of the flour company share. That's by half. And what is the share price? It is 6 each. Okay, market price is 6 at that day when you're doing the share exchange. So don't go and multiply by 3.8. The purpose of 3.8 is different, purpose of 6 is different, and they are on different dates. So half into $6 into 3 million shares. Why you have acquired 3 million shares only? Not 10 million. 10 million you already have currently. After that, additional when you bought 3 million shares only. So on that share price 6 and half. So that means 9 million because 3 into half, 3 into 6 is 18, 18 into half is 9. Okay, 9 million shares. We need this later, so keep it here. Okay. Now, how are you going? Now this part is also done. Additional 30% when you bought, this part is over. So first two requirements are answered. Now third requirement is you have to calculate what is the cash consideration. This you have to calculate to buy the subsidiary. That is the balancing figure because you have the information of all the other things. So it's a balancing figure. Okay. So how I put all the things. Okay. Remember, goodwill has been calculated. So we know that this is the goodwill 2259. Now what are the other things we need? NCI we know now, and net assets also we know, but we have to uplift the net asset. So first let us, and remember in the consideration we have to put the fair value of the original 40% also. We have already calculated this 15.2 million. How? Here. Don't go and put this 14.8. No, this is just an investment in associate we are doing to see how much it has increased from this to the fair value to find the gain, which is 400,000. Only for this purpose we are calculating this 14.8. But the fair value is 15.2 only of the 40% interest. Earlier we have calculated, put it here now. Fair value of share exchange. I've told you, not only in cash, in share also. We had calculated the fair value. Just now it is 9 million. Half into 6 into 3. Fair value of NCI. We have already calculated 11.4 here. This 11.4. Okay. And then what else? Net asset we need. Net asset has already been given here. If you see this 35,741, but they told there's an increase in the land of 600,000. So just add 600. That's it. So it will be 36. It was 3341 before. Now it is 36,341. Okay. They have shown it also. Show it like this. Okay. Definitely when you're using Excel and all for this, better to use Excel. Don't use Word, and you can just put it. Just simply divide by 600. That's it. And you know that is deduction. So just go backward. 2251. Start from goodwill. Then 2, then 3, then 4, then 5. This could be in any order. This does not matter. This 3 part. But yeah, this and this. Okay, but it's better to show it like this because this is also consideration. Okay, and this also will come equity interest. Then we record NCA, then we record net asset. So with 2259, add back, reverse the sign. 36,341, deduct 11,400, deduct 9,000, deduct 15,000, 15,200. What is remaining is 3,000 or 3 million. So that's the balancing figure. It will be in positive only. Cash consideration. That means you have paid in cash 3 million to buy that subsidiary, to buy that additional 30%. That's what you're finding out. And this impact you have to show in the cash flow statement also of this 3 million. That's the fourth requirement, the last requirement in requirement A. Okay. Remember, share exchange is not a cash flow. Okay, that's why it will not be reported in the statement of cash flow. If anything is not cash flow, no need to worry about it. But where is the debit entry? For the share exchange, it is recorded in goodwill. Okay. Where's the credit entry? In the share capital and premium it will go. Now, you have to briefly write in words. So this is the fourth requirement under A. Okay. So the cash paid. First you have to write, then show the calculations. Always write, then show the calculations. So cash that you are paying to acquire this one, which is just now 3 million we got, or 3,000. 3 million. Okay. Not 3,000. 3 million. Where this will be included, first you have to write in the cash flow statement. Where? Whenever you are buying, you are paying cash to acquire a subsidiary, that amount goes under investing activities. Number one, you have to know it. So it will be included here. Next, what about the cash that is held by flow, the subsidiary? Because now you are acquiring that, no, flow. So whatever the cash that is held by flow, it comes under the group control now because consolidation and all. So the net outflow, it's a net outflow. Okay, because you have to pay the cash to buy. Okay, will be the difference between 3 and 1.234, not the whole 3 million. Okay, this is the net outflow that will be presented, 1766. Remember, this figure will be using it later on. Why 3 million minus 1.234? Because here this 1234 cash and cash equivalent, this is of the flow. Whenever you are having the subsidiaries cash and cash equivalent, deduct it from the cash consideration. When you the cash consideration that is used to buy that subsidiary. So 3 million minus 1.234. The balance only you will record. It's an outflow. Okay, that's it. Now we are coming to the requirement number B. Here we have to draw extracts of investing and financing activity. Before that, write the proper heading like this: extracts from the consolidated statement of cash flow from Sugar Group. Write the name of the group, Sugar Group, year ended 30th June 2008, and also which statement is it. It is an extract of the consolidated statement of cash flow. Labeling 1 mark. Okay. And since you are going to do this in an Excel, put bracket will not work, because when you put bracket in the Excel that is given to you on your CB platform, not the normal Excel. I'm not talking about the normal Excel that you use in your laptop. CB Excel, bracket, it will take it as a text. So don't put bracket. Whenever you have to show on cash outflow, put minus figure, minus sign. Automatically it will be deducted from your cash inflows. Okay, in your CB Excel. Definitely I will show you a demo, but this is just I'm telling you in advance. Okay, so that you avoid this silly little mistakes. Okay, and always make a reference figure to your workings. You definitely need workings, even if they have told you or they didn't tell you. Definitely they will not tell you. You have to show the work. You need workings. Without workings, how will you get the figure? Because it's a balancing figure only. Most of the time, whenever cash flow statement figure, when you have to calculate, there are workings behind it, and most of the time they are the balancing figure. So to calculate the balancing figure, you have to collect the amount from various sources, from your statement of financial position, from your statement of profit and loss, and then the balancing figure is your cash paid or cash inflow or cash outflow that you record in your statement of cash flows under investing, operating, and financing. Understood? Okay. So first, let's start with the directly. No need to touch operating activity. We are always programmed to do operating activity. No, it has not been asked. Don't waste your time. Cash flow from investing activity directly and cash flow from financing activity. You are going to do it in Excel, so make sure that you bold the subheadings, so it's very clear for the examiner to know that okay, this is the subheading, under this are the things. Always try to make it very presentable for the examiner. Okay, when you're doing it even in Excel also, I know you'll be doing it at a great speed, but try to make it look presentable and all. These things will give you the marks. If trust me, if you make things easier for examiner will make it easier for you. He will easily give you marks, trust me. So always follow that, be professional, follow that professionalism, okay, throughout the paper. Make it presentable. Okay, there is no earlier we used to write, so we can say okay, our handwriting is not so good even if we know everything. So maybe our marks, there were chances that even though we wrote something, because of handwriting, they were not able to understand and they could have cut our marks. Now there is no such excuse because you are typing it. Okay, everything is very proper. So it's up to you how you are presenting it. The order, are you following a structure? Is there any structure in your mind that you are putting it in the Excel? Okay, so this you have to do in an Excel sheet, not in the Word. It will consume a lot of time. Most of you students, most of the time students ask me why I cannot do this in the Word. I will just write the heading, use my calculator, find out the figure. Trust me, if you try to do this, it will waste a lot of time, because doing in calculator is more time consuming. I'm talking about the calculator that is given to you on your online calculator, not your manual calculator. Will take more time than the Excel. Trust me on this. If you don't believe me, go today and do a question using both the method and see which one is more efficient, the Excel or your calculator. You will get your answer. Okay, so let's start with interesting activity. Drop the three zeros. Okay, make everything in thousand. It becomes very easy to deal with small number. Don't write in millions. Okay, because anyway you have to write, for example, you're writing 4.5, you have to write the six zeros every time. You have to keep on writing the zeros. So avoid the zeros. Okay, just write everything in thousands, is easier also. Even in Excel also you can do like this. Write in the cell above the $3, three zeros, and then keep on writing in thousands. Okay, so let's start. Any order you can start, does not matter. Okay, any order you can start, but sometimes you need to do some things before you can do the second thing, because sometimes one thing is dependent on the other thing. Okay, you understanding? So that's why you see also that certain order needs to be followed. Okay, so definitely you will understand this with the practice and all. Okay, I'm not going to tell you now that this is the way or this is the order that you need to do. That's not a big thing for us. Big thing for us is just knowing how to calculate the figure and from what sources we have to take the figure, because taking from different sources takes a lot of time. There you need to save time. People always struggle, where can I save the time? The time you can save is extracting many numbers from different sources and putting it in one thing and getting the answer. But taking it out from different places, this takes, because sometimes you might miss out one thing. Okay, so that's where you have to save your time. Okay, so all these things has to be done simultaneously. You are reading, understanding, picking the number have to be done at a great speed. Okay, because this type of question, if you see the length of this question, it will take a great amount of time if you do one by one slowly. No, one thing you are doing simultaneously, on the other thing you have to show the effect. Okay, so now let's start with the net cash. Okay, always first thing first, easiest thing, whatever is directly given to you, no adjustment is required, take it and write it. Wherever adjustment is required, you can keep it for a little bit. Adjustment is not required, just write it. For example, cash paid, wait, cash paid to acquire butter, it says associate 5 million, so it's a bracket, it's an outflow. Just write it, no adjustment is required, no working, because you can see there is no working also next to it. Okay, net cash paid to acquire flour, net cash. Okay, not the cash paid. What was the cash paid? 3 million. Out of that 3 million, you have already deducted the cash and the cash equivalent of flour, and you got this 1,766,000. Take it, it's an outflow again. Okay, already you have got it here in the previous part A. This is why it's very important that you follow a proper order and the numbers are correct. Because if your part A answer is correct, there is no chance in part B you can go wrong if you are taking those same figure. At least in those parts you'll be correct. Okay. Now, starting with working one, cash paid, okay, to acquire intangible assets. See, another easy thing I will tell you. Okay, easiest thing. that I usually apply. Okay, that saves a lot of my time rather than going here, there, and finding. And there is no chance of missing out things. That risk is eliminated. How? Follow the order of statement of financial position. Follow the statement of financial position. For example, in the statement of financial position, the items, the way it is, follow that order. Will save a lot of time. For example, where is that? For example, here. Here, the first thing is intangible assets. So I'm first going to deal with intangible assets. Anything relating to cash under intangible assets, first I'm going to deal this. Then property, plant, and equipment. Then associate, dividend, and all. Then the financial asset. Then I'm going to, this will go, the equity section will go under the financing activity, such as share capital and all. So, so this gives me an order in my cash flow statement also. This is a great time saver. You don't have to think because after intangible property, plant, equipment, after that associate, after that financial asset, after that blah 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 blah. So things. So start with intangible asset. Go in that order is very easy because if you go in that order, you don't have a fear of missing out anything. You know that okay, you can just put tick mark. This is over. Okay, this is over. Okay, okay. So intangible asset straight away. If you see here intangible relating to intangible asset. Okay. So what did they say? Cash paid to acquire. Most of the time, if it is disposal, then cash proceeds received from disposing. If it is cash paid to acquire intangible. How do you know that you have paying cash and all? There's a working to it. So straight away, just write this heading here, cash paid to acquire. Don't write acquire or dispose. You don't know whether you are receiving or you have to pay. Just write intangible asset or if you want to write the heading later on as it is, but write working number 1 straight away. Put working number 1 for it because in this way it's easy. 1 intangible asset, 2 property plant and equipment, 3 associate, 4 uh, financial instrument. It's very easy to link like this also, working with the order in the financial statement. So this is working number 1. Okay, straight away keep spaces because now it's easy. You are writing on an Excel. Okay, so you can always insert or delete cell and minimize or extend their space. That's not an issue. Earlier you had to estimate how many pages I had to leave. Earlier I used to tell, okay, when it was on a paper base, leave one page and go to the next page and start doing the working. Remember, your working and your main cash flow statement should not be on the same together, not one after the other. No, all the workings has to be separated from the main financial statement of cash flow. Later, first you have to write the statement of cash flow. Later down, after you finished, your working starts like this. After you finish this financing activities, everything at the end only working comes. So this same manner, same order you have to follow in your exam also. Okay, when you're writing workings, don't just write okay working 1 2 3 4. Put clear label subheading. You're using Excel also you have to put like this. Intangibles. Working 1 is intangibles. So intangible, what are the things we need to use? Okay, I'm going to follow a technique here. Same technique replicate in all the other things. All the items that I'm going to take from statement of financial position. Okay, I'm going to teach you for intangible. I'm going to show you same thing you can do for property, plant, equipment, your financial instruments, your associate. That is the thing that start with, brought forward, and carry forward. First, write this too. In between, there will be some spaces. You don't know how many spaces, 2 lines or 3 lines. That does not matter because you can always press enter and then go down. First, write intangible. Second line, put carry it forward, the closing balance. Later, you can put the space and all, and then in between you can write. Okay, that's not an issue. On a CB platform, these things are easier. But start. This is the order. Before writing in between things, write the opening and the closing balance. How are you going to get the opening and the closing balance? Always from statement of financial position. Okay, if you're confused, just look at the item. Intangible comes in statement of financial position only. So we know this also statement of financial position. This also statement of financial position. They will always give you both the brought forward and the carried forward balance. Because without this, you cannot do the statement of cash flow. It's not possible. So don't worry about it. Both will be given to you. Okay, so here is the balance. 2007 is the opening, 2008 is the closing. So if you see intangible, I'm not going to go for the other items. I'm only going to show you for the intangible asset because this will save your time. This is the opening balance and this is the closing balance for intangible assets. Same way, other things also, other items you can do. Okay, so this is the order that you need to do. Step 2. Okay, see, after that, whatever the things, think about intangible. What is an intangible? It's an intangible asset. So relating to that, amortization is there. Amortization already they have mentioned in the line in the here under this. Okay, always don't assume that's because I have read it somewhere, so I will put the figure. No, always go back and again check before you put it actually in the table. Okay, always, because now everything you can open multiple windows at the same time. This saves a lot of time because everything you can do while you are writing, you can see on the next screen that this is the amount or not. Earlier you had to turn pages and find and waste a lot of time. For example, here under this first point only, amortization. This first paragraph talks about 3.5 million amortization. No impairment, no disposal. Only so they told no disposal. Now we know that it has to be accusation only. But still we'll check with the workings. Okay, 3.5 million is amortization. So you see one figure, two figure, opening and closing, you have taken from the statement of financial position. The second one, amortization, you're taking it from other information. Sometimes you have to take from other information also, you have to extract. How fast did I do this? Not, it didn't take me 1 second, maybe 1 or 2 seconds. Why? Because I know intangible amortization is related to intangible. This anyone will know. I don't have to keep on looking at the wages, which what information should I take, what information should I know. So 3.5 is deducted. So this is done, this is done, this is done. Correct? OI means other information. Okay. Next, goodwill. Remember, intangible includes goodwill. Goodwill separately they didn't disclose here. Most of the time they disclose it separately, but here, since they didn't disclose goodwill separately in the statement of financial position, okay, it is assumed, it should be assumed that it is included under intangible because goodwill is also an intangible early. What is goodwill? Intangible. So include that goodwill also. Goodwill here you don't have to calculate, already calculated, so take that amount 2259. Correct? Add it. It's an addition. So where did you take this goodwill on accusation? Already calculated. Okay. So this you have taken from the question itself. Now, any license and patent on accusation. Remember, this cash purchase is just the balancing figure. This balancing figure only you are writing in the investing activity. Okay. But this license and patents on accusations of sugar, this you need to work out. It's given, the figure is given. Why license and patents on accusation? Because license and patent are also intangible. So there are three types of intangible. One is already the intangible, second is the goodwill intangible, third is the license and the patent, and fourth is finally the expense, the amortization relating to intangibles. Just intangible, they didn't specify, they didn't specifically tell this or that, so just deduct it. Okay, so license and patent, it's here. It's not here. Here you see, under this intangible asset, this is the flowers only, the subsidiary is intangible asset only, what they have. Under the net asset you will get it. So from net asset also you have to take 6781. Same for property, plant and equipment you have to do. Okay, cash and cash equivalent you already have taken it and deducted, so that you don't have to worry about. Okay, so this also you have to add. Okay, so here you have taken it from where? Net, wait, just go down. Net asset, this you have taken from net asset of the subsidiary. So you see so many places you have taken it. Add it. This is the balance figure. Okay, do all these calculations and check this. Okay, the difference between this two is this balancing figure. I'm sure you know how to find out the balancing figure. If you don't know, then please make sure that you do know. Don't just assume and just go ahead. Okay, it will be 120. You calculate on your own and check, are you getting this 12051 in Excel? That too in Excel, you have to first check that. Okay, so this 12051 will go here. I'm going to put a tick mark whatever I have covered. So intangible asset over. Second, Very easy for me because I know the order of statement of financial position, property, plant and equipment. This serves two purposes. One, I could clearly label the working. Second, I know the order. Okay. So we have disposed. We already know from our other information that we have disposed property, plant and equipment, and from there, what are the processes that we are receiving? We don't know. We have to calculate working too. It's an inflow. That's why it's positive. Okay. So working too. Again, property, plant and equipment. Same way we are going to do how we have done for intangible assets. Brought forward statement of financial position, closing balance, 2008 figure from the statement of financial position. Okay. Then in between, what is related to property, plant and equipment? Depreciation. Already they have given us the figure. So 10 million deduct. So this is over, this is over, this is over. Next, accusation of flour at fair value. Remember, when you're taking the accusation of flour, the net asset of property, plant and equipment. Let us go back. What was this? This was 18076, but you have to take the fair value. When you're taking the net asset, remember everything else is correct. Only there's a land of 600,000 above the carrying amount. That's why you have to add 600 here. 18676, the fair value. Okay. Here also you have to maintain that fair value. Okay. At fair value only when you have acquired. Whenever you have acquired the subsidiary, you are taking their asset. You have to take it at fair value. That's why at fair value you are taking after increasing their 600,000. So 18676. Okay. 18076 plus 600. So this is also taken. That's it. Any depreciation, accusation. That's it. These are the common things. These are very common for every question. Every question you will see this order only. That's why I'm very quick to know. This is again the balancing figure. It's an outflow. You will see it's a bracket because you're disposing. Disposing means you are getting this amount from disposing. 6370. It's an inflow for your cash flow statement. Understood? Now, this is the carrying amount of disposal. This is not your proceed. How are you going to get your proceed? You have to do an additional working here. They have told that you are selling this at a loss. Loss is 2 million. Selling at a loss means deduct the loss from this 6370. This is carrying amount minus loss. You are selling it for 4370. That means the amount of property, plant and equipment is worth 6.37, but you are selling it for 4.37. You are selling at less. That's why 2 million loss came. Understood? So basically just deduct loss from your carrying amount and you will get the sale proceed. 437 million. That's it. You have to take here in your cash flow. So 4370. Okay. It's an inflow. Next, what is else is remaining? Statement of financial position. Third item is associate. So working 3. It's very easy. Okay. Here dividend received from associate. So dividend received from associate. Okay. Here also investment in associate, brought forward, carried forward, statement of financial position. See the figure. You will get it. Okay. Next. Remember there is one more associate, that is butter. So you have acquired it for 5 million. So this you have to add. Okay. And there's a profit, associate profit for the year. This is from profit and loss you are taking. That profit also you have to add with the associate, the brought forward balance. 15,187. This you have got from here. This 15,187, the profit. Okay. So 15,187 you got it from here, and next is 14,800,000. Step accusation part A. This is you got from part A. Investment in associate. This is the reason why you had to remember the cost was 10 million and you added the 40% of that 12 million, 4.8. 12 million was the increase in net asset. You added with the cost and 14.8 million. We are not taking the fair value. Okay. We are taking this 14.8 investment in associate. We are taking and we are deducting it. Why deducting 14.8 million? We are disposing associate because we told that when control is gaining, that means disposing associate and having buying subsidiary. Okay, that's why deducting 14.8 million. And finally, whatever is there is, even though it's in bracket, It's dividend received. Okay, don't get confused why it's received and in bracket. You will get it in bracket only, balance sheet figure, because associate is paying you this dividend. For them it's a bracket, but you are receiving. So in cash inflow it's an inflow 2253. You have to record it. Okay, so two more things are there. Next, proceeds from the disposal of this. This is proceed. For this you don't need a working. Working is here. It's very simple. That's why simple working you can put it like this, because you are disposing it. The carrying amount was this of this investment was 4 million. Okay, I think they have told in the other information. And the other information there was this here. They told carrying amount was 4 million. They sold it at a profit. Add the profit. Whenever it's a profit, add with carrying amount. Get the cash proceed or disposal. Whenever it's a loss, deduct the loss from the carrying amount. That's the rule. Okay. So here, earlier it was a loss we deducted. Here it's a profit, add to get the cash proceed, because we are selling it. So 4 million plus 0.5. This is the cash proceed inflow. Here, investment income is working number 5. Why? It comes under investing activity. Everything, all this item were from statement of financial position, except this. This is from profit and loss. So after you are done with statement of financial position, this is the order even you can do in your exam. Okay, I used to do this, and it's a great time saver for me. I don't have to think what amount should I take, what should I take, what is the order. No, everything is set in order. So statement of financial position, if you see all your this thing, definitely this video is taking longer than as I expected. Okay, but never mind, it's important because this is a new question and this things area needs to be covered in this question itself, so the next question I don't have to repeat the same things. Okay, now intangible asset, property, plant, equipment, associate and financial asset, all these three are over. Equity part and all I'm not going to touch under investing activity because it will go under financing activity. So what is left is here. Next you go through statement of profit and loss, this order only, this and this. Okay, I don't need NCI, I don't need associate company share of profit, I need investment income under investing activity, which is 3891. From this I have to deduct three things. We have earlier discovered it, right? I've told you also. So here you will not have that opening and closing balance like how we had for intangibles and property, plant and equipment and other things. Okay, but here we need to do two workings. Even though working 4 is not mentioned, but we have to slightly do a working 4, because without this working we cannot go to working number 5, investment income. Because for investment income, okay, if you see, we need working 4. You see, we need this figure to do our working number 5 to deduct from our investment income. That's the reason we first have to do working number 4. Okay, we want to know this asset. So this we'll get it from the statement of financial position, the financial instruments, bought and closing. Whenever you see this, means it is taken from the statement of financial position only, nowhere else. 6 million, 3 million. Then carrying amount of disposal, you have disposed it. What is the carrying amount? Just now we checked 4 million was the carrying amount deducted because you have disposed it, right? Now you are left with 2 million, but you have the closing balance 3. So 2 to 3 is a fair value gain, which is 1 million. It's a balance figure. 1 million is a fair value gain. That means because of that fair value, your closing balance increased from 2 to 3, known as fair value gain. Now let us go to this thing. So that fair value gain only you have to calculate in working number 4, because that fair value gain you will deduct it from this 3891 investment income. This is per profit and loss. Okay. Next, fair value gain on step accusation. Remember 400,000 because it was 14.8 for associate and then 15.2 was the fair value or something. The gain is for step accusation from one date to another date. The dates are different. Because of that, there are some date, and during that date, value change. That is known as fair value gain. So that gain also has to be deducted from where? Investment income. They have told clearly. So 400,000 deduct. This also deduct. Then profit on disposal of this one. They have clearly told in other information that there's a profit for disposing this. It's 500, deduct it. Three things deducted. This is the investment income received will go to the cash flow. Okay, and this we have done. Proceed 4.5. How we have got? We have already showed it. Okay, so here if you go, this is over now. Investment income is over. Financing activity. Okay, two things. One is issue of ordinary share, the other one is dividends paid to NCI. Will come under financing activity. Working 6 and 7 if you see. So we'll go through working 6 and 7. Okay. Issue of ordinary shares during the year. Okay. Again, start with same thing. But here, please, share capital and premium, they are adding together. Add together, don't show it separately. Whenever it's together, shows together. Okay. They have told under other components of equity, it is premium. So that only they are taking. 20 plus 18 opening, 23 plus 33.6 closing. Okay. This is over, this is over. Next, share for share exchange. Remember 9 million we have calculated. Add that. And the balance is the cash proceed. That means you are getting this much. 9.6. It's an inflow. Okay. Basically, you are doing this to find the cash proceeds 9.6. This you will be adding in the financing activity if you see here. It's an inflow. Now dividends paid. So because dividends paid, it will be in bracket 3324. I'm not going to come back again here. Just directly go to the next question from working number 7, 3324. All these are over. So you see everything is in order in the working. Started with state cash, all the assets. Then it went to the shares and NCI and all. If you see shares and NCI. NCI is working number 7. So dividends paid to NCI. If you follow that order, you don't have to worry about this thing. To see here, just let me take you through this. This order only they have followed. First is intangible, number 2 is this, 3 is this, 4 is this. Here they have done 4 and 5 together. 2 workings. Then 6 is ordinary share. With ordinary share, they have taken share premium also. And 7 is NCI. You see 7 items and 7 working. Very easy. So NCI also here you have to take opening and closing balance. And this too they have added. Share premium. Whenever share premium is given, added the share capital. Don't take it separately. Otherwise, you will make some mistakes. Even though I've never tried it taking separately. But let's see. So this is the last working before we go to working numbers C. C is a very brief, 4 marks. But okay. Opening statement, closing statement. Okay. So NCI, what do you need? What is the NCI's profit for the year you need? It's already given in profit and loss. 9162. Add it. Okay. This order does not matter. Okay. You can write it in any order as far as you wrote all the figure and got the right answer. That's it. Because you don't know after this what should I write. That order is not so important. This is the figure that you have to write. Profit for the year. Okay. Next. This is also the balancing figure only. 3324. This you have to record under financing activity. Dividends paid to NCI. Basically for that reason only you are doing this working. To find the dividends paid to NCI. So accusation of flaw. During this also you are calculating NCI. How was it? 11,400. The fair value of NCI. We have already calculated when we bought the subsidiary. That you have to add. With the opening and they take their profit and closing and then find the dividends paid. So that's it. We are done with part A and B. Now we are done left with part C, defined benefit scheme. How this will affect your cash flow. Before that, let us read the requirements because we haven't read the requirements yet. Okay. Describe the impact, if any, that the defined benefit pension scheme will have on the consolidated statement of cash flow for the sugar. Assuming calculation. Okay. Now we have to read that paragraph for this. Sugar is only entity of the group which operates. Sugar is the only entity. Okay. Here we don't have to worry about consolidation. This, that. Sugar, the parent company, only operates this. This increased from this to this. Okay. The obligation. So the moment in this represents service cost, net interest, and remeasurement. 3 things. Okay. Remember in your answer you have to talk about these 3 things. Okay. So they usually make cash contributions into the scheme on an annual basis towards the year end. The significant increase in pension scheme obligation for the year ended was because why it increased significantly the obligation, because the scheme did not follow the normal practice and was instead made in July 2008. But the year end is what? 30th June 2008. This is the year end. They have paid after that day in the July later, which does not fall in the current year, current period. Okay. Benefits paid during the year were 2 million in cash. Okay. So all those things. Now you have to talk in which places, what will be the impact and what is the impact for 4 marks. So you have to talk about 4 separate things. Maybe you can talk about remeasurement, net interest, service cost, and also any other separate things if you want to mention. Okay. So tutorial note says to get this you have to nail IS 19 rule. Okay. IS 19 is not a part of a group accounting, but still it is asked. So this shows the variety of questions that can be asked in question number 1. You be prepared for all the standard. Okay. You should be able to identify cash and non-cash expenses. Not everything is cash flow items. Some are non-cash expenses. You have to recognize that under IS 19. Okay. So how? The answer is. The answer is in 4 separate paragraphs. For 4 marks, 4 separate paragraphs. Okay. First of all, recognize the cash flow for IS 19. So the old cash flow that will be recorded where? Cash flows. Consolidated. Write the full word. Consolidated statement. Don't just write statement of cash flow. It should be consolidated statement of cash flow because it's for group accounts. Remember. Question number 1. Always don't forget the word consolidated. Any financial statements, put the consolidated in front of it. If they ask for individual statement, then you have to talk about individual statement. Otherwise, consolidated. Full time. Okay. So the only cash flow for this is, it is regarding to what? The contributions that you have paid. That's it. Only this is the cash flow item. This is an outflow. Okay. And where will this be recorded? Under operating activity. You have to record the places also. Under which place? It will be recorded under operating activities. Okay. So these are the keywords. This is the first thing. Recognizing cash flow. That is the contributions paid. Number 2. Second point. Second mark you will get is what? About the benefits paid of 2 million benefits paid. Okay. So they did not make any contributions, first of all, until after the year end. Whatever they made it on July. July does not fall in the current period. That is after the year end. So in the current period, no contributions. Okay. After the year end, so you have to talk about that. So this will have no cash flow. No cash flow will be recorded in the current year statement of cash flow for this the year ended. Okay. So this 2 million benefits that are paid out of the scheme. Okay, this is an outflow because you are paying 2 million benefit. But this is outflow from the pension scheme. It's a separate entity. You have to mention this. Whenever you are paying a benefit, it is from the pension scheme, which is a separate entity to your entity. So it's an outflow for them, not for you. So this is not a cash outflow for sugar. It's for cash outflow for the pension scheme. So it will not have an impact on your cash flow statement. So second mark you will get here. Third mark is what? All your service cost, net interest cost here in this paragraph. It's a big paragraph because you are including 2 things. Okay. So this does not mean that the pension scheme will not have an impact. Okay, it will have an impact. Even though this benefit is paid out of this one. Okay. Why? Because remember you have to mention this. Why? Because whenever your requirement specifically tells you, assuming that it has been prepared using this method, you have to talk about that assumption. Assuming that the cash flows of operating activities are calculated by indirect methods, so you have to talk about this. You have to mention it somewhere in your answer, whenever assumption they have given you. There's a reason why they have given you that assumption. They could have given this question without that assumption also. They are making it more clear to you. So since operating activities are using indirect method, you have to necessarily adjust. This is the reason. For any items that affect operating profit but not cash flow, remember? Anything that affects your profit but not cash flow, we adjust. Non-cash expenses, incomes, we adjust. So whatever the service cost component, we have to talk specifically about this. Net interest and the service cost. Remeasurement is in a separate topic, 4th paragraph. 4th point is for that. Okay. So service cost, this will be added back to the group profit. Why? We have deducted. Service cost is not a non-cash. It's a non-cash item. It was deducted from profit, now added back to the group profit. So net interest is in the finance cost in profit and loss. Okay. It includes the net interest. This net interest component is included in the finance cost only in the profit and loss. This is also is a non-cash. It's not a cash flow. So this also require adjusting. You have to add it back. Same like service cost. So service cost, net interest, you have to add it back. They are non-cash flow item. Relating to remeasurement. Remeasurement does not have any impact on the cash flow. Why? It is not a cash flow. Number one, remeasurement is a cash flow? No. Nor does it impact the operating profit. So in 2 lines, you can just write. You don't have to write paragraphs and all. It's not a cash flow. It does not impact the operating profit also. Why? Why not operating profit? Where do you recognize remeasurement relating to IS 19? First, understand that. Because earlier only they have told you have to nail IS 19. This is the reason why the examiner told you. Without nailing it, you will not be able to identify. And the tutorial, no, the reason is given. Because it is recorded under other comprehensive income, not profit and loss. Profit and loss only will have an impact of operating profit. If something is recorded under other comprehensive income, OCI, will not have an impact, direct impact on operating profit. So that's why it's not a cash flow. It does not have an impact on operating profit only, the remeasurement component. Because according to IS 19, remeasurement component goes on the other comprehensive income and it always stays there only. It is never reclassified to profit and loss. You should be thorough with IS 19. These things, you see, various side examiner will ask you attack in one question only from various angle, various side. You have to think about a question when you're writing from various angle. Remeasurement, why not it will have an impact? Why this? Where it is recorded instead, if not here? Okay. So these things and all, you don't have to write in your answer. You can just read through it for your understanding and all. Okay. Now we have officially finished this question and let us go to the marking scheme. So 10 marks, 5 marks for 40% and share exchange. Fair value NC and identifiable net assets 3 marks. Goodwill calculation and treatment of cash consideration 2 marks. Next, B 16 marks. Okay. Intangible. Here also they are following this order only, if you see. Intangible accusation, proceed on disposal of PP, cash paid for butter 1 mark, because this is directly you can take as it is. Whenever you can take directly as it is, no adjustments 1 mark only. Whenever adjustments are required, it will be worth more than 1 mark, 2 or 3 marks. Acquisition of intangible 3 marks. Proceeds of disposal 3 marks. Dividends received from associate 2 marks. Not much working. Investment income again 3 marks. 3 things you have deducted from there. Issue of ordinary shares will be 2 marks because only I think one thing you have added. And NCI dividend 2 marks. Okay. Part C, it's equal 4 marks. One is cash flow to include and exclude other elements of defined benefit scheme. For example, remeasurement component, service, cost, net interest, all those things. Okay. Application. Now, examiner's comment. Before I end this video, let us go to the examiner's comment, not word by word. Briefly, I will tell you what is included. They say part A was well answered. Okay. Most of the candidates were able to identify the correct cash consideration that is required to buy the subsidiary. That is that 3 million. Okay. But most of the people, they forgot to work out the net outflow. They deducted that 3. They forgot to deduct that 3 from that one. Cash flow of the subsidiary. They forgot that. Okay. Part B, you have to collect from various resources. Okay, and they found this question challenging, students, even though this should be the easiest questions doing investing and financing activity, just the calculation. Okay, so a well presented answer for this should be having a list of additions or deductions, correct, right, from opening to closing balance. That's what we have just done, went through. Okay, and balancing item for the cash item. Most of the time cash item is the balancing item. Some spreadsheet answers did not use the functionality available, which meant basic arithmetic errors occurred. Remember, even though you use spreadsheet, it always matter the quality of data that you are inputting, how you are working it out. Sometimes you can make mistakes inputting the number into the system, and then answers that you get might be wrong. So that's why you have to check what you're inputting, how you are doing it, how are you performing the functions, the calculations, because it will give you errors as they have given it for the past students. So errors can come from Excel too. Don't totally blindly rely on the spreadsheet answer. Meaning they will perform their calculation correctly, but you have to see yourself. Are you putting the right correct amount? Or is there any mistake from your side? Okay. Most of the candidates didn't show workings behind a figure. Just they put the figure in the Excel, that's it. They could have done a type out working or a formula within a cell. A formula within a cell is more recommended because it's time saving rather than writing out the formula. But anything you can do it. It's considered more appropriate rather than just writing the number. So if you are not showing any supporting workings, for example, working 1, 2, 3, 4, 5, not showing like that, just putting in the cash flow, this item, that item, that, not showing where you got that figure from. For example, in the cash flow, where is it? Let's say this dividend received from associate. I have just put 2253, but I didn't show any working like this, no working. How will the examiner know where you got the 2253? Maybe you did the working correctly. The answer is also correct. But how they will know where you got the amount from? So you will not get the full amount. You will only get 1 mark for the right answer. That's it. Most of the marks are in your working, trust me. So you will lose that mark. So you have to show. It's needed. It's very important. Don't tell me that because we are doing in Excel, working is not required. Just put in that. No. And most of them, they come and try to justify saying that time is running, time is wasting. I'm wasting my time doing all this workings. It's not needed. I can directly get the answer, get the right answer. If I get the right answer, it's perfect. No, it's not perfect. You still have to do the workings. Nowhere it is said that because we have shifted from the paper based to CV based, you don't have to show your workings. Still the same uh, thing is applied till now for the students, ACCA students. Okay. Otherwise, full mark will not be awarded. Part C is weaker answers focus too much on the benefits paid in the next year. Okay, it is not even relevant for this year, but they focus too much attention on that. It was not even relevant because it has no impact on the cash flow. And some incorrectly suggested that this benefits that is paid represents an adjusting event. No, it's not. It's not your outflow. It's the pension scheme's outflow. And also they miss the cash flow focus of the requirement. Cash flow means they are just talking about IS 19 already. Measurement will be recorded here. It will not be recorded. That's it. No, you have to talk about the impact of the cash flow, whether it will have an impact or not. That's it. So that's it for question number 1, sugar. And the next question will be hummings, question number 2. And with this, we have completed group accounting. So see you in the next video. Till then, take care.